In your conversations with the people in Singapore or other decision makers in financial services and so on, there's this jadedness of having failed somewhat with the equities business they tried to build from China. Well, it's not that they failed, but Hong Kong is perhaps more successful than Singapore. Singapore is definitely more successful than any number of other markets, but there are some issues in that sense. Given the roadblocks they have in the equities business, what were some of the cautionary tales or the sense of cynicism in terms of thinking that commodities might work in Singapore?
There's success stories and there's failures, and of course we are human beings. I think we always that didn't work the last time they did that. You got to keep trying. There's a story that I tell, and it's a true story. WTI and Brent crude oil, the two dominant crude oils in the world, in their original, they don't look anything like they originally did. Their names are still the same, but they've completely evolved over time. WTI is in its 8th or 9th iteration. Jeff Sprecher, the head of ICE, in a conversation I had with him, he said, Tom, he goes, I think the ICE Brent is 13 times on from where it was when it was first launched. And it stumbled out of the gate the first 4 times. It was not, don't call it a failure, but it didn't definitely enjoy the success it does today. You got to keep, there's a validity to every contract. It's a matter of your willingness to tweak it, to make it work, to change with the times, and that's the key.
So, gold, 1 forex contract, right, and 2
crude oils. Yeah.
Crude oils.
Yeah.
Are you taking a very cautious? Is that a sign of being defensive?
No, quite the contrary. I think the gold is actually quite unique. It's a physical delivery product. We're not taking the gold off the shelves that other people have reached for. We're going to build a benchmark price in Singapore. It's going to be a Singapore contract. That's important to us, and that's our first anchor contract. Brent and TI are really the known crudes out here, up against the 3rd densest refining region in the world. Only Houston and Rotterdam exceed.
Larger than Singapore.
Yeah. It's a product-driven market out here based on global crudes. And so we said, we're going to allow you to hedge your crude risk up against your regional products as just a first stepping stone in our product mix. We've got a number of products beyond that in terms of our energy space that we're going to be adding to it quickly.
But the forex product seems to be definitely defensive because Singapore is the largest forex market outside of Japan in this time zone. So.
But you don't have an open trading exchange for currencies anywhere in Asia. You have 95 off-exchange platforms that are in unregulated markets. As much as you do have the OTC market, and albeit it's impressive the size of the market, but the accessibility and also the scale. We've scaled the contract sizes down for entities, for trade people to participate. You don't have to be hedging $1 million contracts. We see an opportunity to notch people in where they can be in the currency of choice against their trades, and that's really what we want to see.
And what about eventually trading the ACU, for example?
As an Asian currency unit? Yeah. The ACU. You have to look at it. You have to look at it, but you have to look at it cautiously because there's still definitely, there's ideas of how the currencies across the region, they operate all uniquely. Singapore dollar as opposed to the Taiwan dollar. You look into the Korean won or the renminbi, which is the most spoken about relative to how it's regulated, or the Aussie dollar or the yen, which are open. So they're all different, and they all have different economic values. But I think a huge opportunity is sitting there that, everybody's looked at the euro and everybody talks about the US dollar and the renminbi as a standalone currency, but you look at the Indian rupee.
So how is that mechanics going to work? Is are traders going to come to your door and say, Tom, we'd like you to start trading this. We want to see what it looks like.
Yeah.
Or the government might come to see you and say, well, we're ready to start trading this, and can you put that on the market and see what happens? Or do you have an internal discipline in terms of when you qualify something for whether it's tradable?
I think it's actually all three. Truthfully, a lot of it starts organically, internally. That we'll look at market share, we'll look at opportunity, whether it's taking a product that's already traded in some other part of the world to try to give a risk profile out here on a risk product. A lot of it is people knocking at our door and going, I've got risk in this. I've got a product. It's a viable product. It's got $1 billion+ a year flow, and I need something to solve my get it on an exchange to collateralize it. as well as the regulators, they see, they know the opportunities, or they've been well defined, and say we'd like to have a Singapore product in this realm. So it's a lot of both. One of the things we do is we really engage the industry. We create a committee around a product, and we let everybody just sort of chew on it, and we sit down, and it's really a very, very evolutionary process.
When you say committee, you mean internal?
Well, it starts internally, and then we invite industry people to come in, and you don't even necessarily have to be members of our, they're people that are within the industry, and we get feedback from them. It could be somebody like you, and we engage them, and sometimes it's over coffee, sometimes it's formal, but it's really about the feedback, because you can't see everything. But you get a little glimmer of this and a little glimmer of that, and you realize, well, there's an opportunity, or there's an open market there that's not been addressed, and so we can address it.
Last question, Tom. The benchmarks that you've set for yourself so that we can measure you.
Oh boy, yeah.
So what are some of the goals that you've set for day one of trading, and what are some of the milestones that you think you should achieve in order to say that this is working?
We're taking a very conservative approach. I think one of the unfortunate parts, one of the legacies of electronic trading, is that people get instant gratification. Everybody wants to have the $1 million home run on day one, and that's fairly unrealistic. In that it's almost damning. If you do that day one, everybody goes, well, you got to do 2 million a day after, and there's unsustainability. Reality is we want to start slow. I use the adage that every journey starts with the first step, or it begins with small steps. And a lot of I've adopted it.
Okay.
Yeah, see, it wasn't me. I think it was Confucius or somebody like that, Marco Polo maybe. But reality is we want to take small steps. We want market participation. That's it. We want to know the first day that our systems are ticking over. They're ticking over properly. We're facing all the regulatory hurdles, all the promises that we've made, that everything works. And then the next day we'll get up and we'll do it again, and we want to have a few more market participants. And that's our agenda. And we want to grow. We want to have consistent growth.
Tom McMahon, thank you so much for spending time with us, and all the best on your first day of launch.
Thank you very much. I appreciate that.